So the Federal Reserve just announced a simple decision about interest rates. But let me tell you, this was not your ordinary meeting. This all went down in the shadow of a Department of Justice investigation, a Supreme Court showdown, and just relentless political pressure from the White House. This was never just about the economy. It was about whether one of our most important institutions could maintain its independence. So how on earth did we get here, and what does it all mean for you?
Here's what we're going to cover. First, we'll break down the Fed's actual decision and why it was so divisive. Then we're going to try to read the economic tea leaves because, they are sending some seriously conflicting signals. From there, we'll pull back the curtain on the political storm that's brewing, get to why the Fed's independence actually matters to your wallet, and finally, we'll look at what could happen next.
All right, let's start with the big headline, the decision that came out of the Fed's meeting.
So remember, the Fed spent last year hitting the brakes with 3 rate cuts to try and head off a downturn. So the big question on everyone's mind was, were they going to do it again?
And the answer was, nope. The Fed decided to hit the pause button. They're basically signaling they want to just wait and see how the economy shakes out.
So the federal funds rate is staying put, right in that 3.5% to 3.75% range. And don't let that little number fool you. It is one of the most powerful numbers in the entire country. It sets the baseline for pretty much everything. We're talking mortgages, car loans, your credit card interest rates, all of it.
But here's where it gets really interesting. The vote wasn't unanimous. 2 members, Stephen Mirren and Christopher Waller, they actually broke ranks. They voted for another rate cut. Now that dissent, that's a huge clue that even the experts inside the room are torn about where the economy is really going. And that division, well, it brings us right to the why behind this whole thing. The incredibly confusing, mixed signals the economy is sending out right now.
This is the Fed's dilemma in a nutshell. On one hand, their official statement says the economy is expanding at a solid pace. Great, but at the exact same time, consumer confidence has absolutely plunged to levels that usually scream recession. You've got a job market that's stabilizing, but inflation is still somewhat elevated. So what do you fight? Do you try to help the job market, or do you try to stamp out rising prices? That is the tightrope they are walking right now.
So to justify hitting pause, Chair Powell said he thinks the current rate is in the range of neutral. Just think of the neutral rate as like the Goldilocks level for the economy. Not too hot, not too cold. It's that sweet spot that keeps people employed and prices stable without slamming on the gas or the brakes. And Powell saying, we're pretty much there.
But, okay, the economic data, that's only half the story. Now we get to the real drama, the unbelievable political storm that's been gathering around the Fed and its chairman.
Just look at how this is ramped up. It starts with President Trump publicly criticizing Powell all through 2025. Then it escalates to an attempt to fire a Fed governor. And then just in the last few weeks, you have Chair Powell confirming a Justice Department investigation and the Supreme Court hearing a case that could totally reshape the Fed's power. All of this chaos led right up to this meeting.
And in this absolutely stunning and super rare video statement, Chair Powell did not mince words. He called the DOJ investigation a pretext, and he directly tied it to political intimidation. For a sitting Fed chair to say something like that out loud, it's just extraordinary. It shows you just how high the stakes have become.
And to see just how personal this fight has gotten, just look at this contrast. Back in 2017, the same White House that nominated Powell was praising his steady leadership. You fast forward to now, and the president is calling him a terrible chairman. It's an absolutely incredible reversal, and it seems to be driven entirely by a political desire for lower interest rates. And if you need any more proof of how serious this is, Powell himself actually showed up at the Supreme Court for Governor Cook's case. When a reporter asked him why, he didn't hold back. He called it perhaps the most important legal case in the Fed's 113-year history. This was never about just one person. This was Powell signaling that the very foundation of his institution was on trial.
So all of this, the investigations, the court cases, the public attacks, it really all boils down to one fundamental principle: central bank independence. Okay, but what does that actually mean? And why should you even care? To put it simply, it's the idea that the people managing our nation's money should be protected from politics. They should be able to make the tough calls based on the long-term health of the economy, not on what might help some politician win the next election. And you know what? This idea is a cornerstone of stable economies all over the world. During the press conference after the meeting, a reporter asked Powell for his #1 piece of advice for whoever takes his job next. His answer said everything: stay out of elected politics. You can just hear the exhaustion and honestly the warning in that statement. It's a direct reflection of the political war he's been fighting.
And look, this isn't just some abstract theory.
An independent Fed is basically the guardian of your wallet. Its whole job is to keep inflation from just eating away at your savings and your paycheck. When politicians get involved, history shows us again and again that runaway inflation usually follows, and it's always working families who get hit the hardest.
So, where does all this leave us? Well, with Powell's term ending in May, the Fed is staring down a deeply uncertain future.
Even though the Fed just hit pause, the market is betting they won't be able to hold out for long. Right now, the smart money is on 1 or maybe 2 rate cuts by the end of the year. But just look at the spread on this chart. It goes all the way from no change to 3 cuts. That's not a forecast. That's a collective shrug. It perfectly captures just how uncertain everything feels right now.
And, of course, the biggest question of all is who's going to lead the Fed through all of this? Powell's term is up in May. President Trump has said he's already interviewed several candidates. Some of the big names being floated are Rick Reeder from BlackRock, a huge player on Wall Street, and Kevin Warsh, a former Fed governor who knows the ins and outs of policy. Whoever gets the nod, it's going to be a critical choice.
Which brings us to this final huge question. The Federal Reserve is caught between an economy it can't quite figure out and a political firestorm. Its decisions impact every single one of us, but its very ability to make those decisions is being challenged like never before. So the real question isn't about the next rate cut. It's about whether this pillar of our economic stability, an institution designed to weather any storm, can actually survive this one.